What's up, everyone? Welcome to a new week. And boy, oh boy, was that some wild volatility on Friday with the semiconductors. Obviously, something we've discussed for a while, the idea that we had to have some type of pullback in time or correction on the semis. And that really was the story of we, along with many also on a few other things, including what we've been seeing in terms of the broad market, what we've been seeing in terms of just in general, everything that's going on. How'd you have a good weekend? I hope you did. Today, we're covering stocks, commodities, and cryptos, going deep diving into some options. And we'll also be looking at some cycle effects during 2024. What are we looking for into the election year? Do we expect more volatility? Do we expect a crash, pullback, or correction? All of that coming up. Let's give a shout out to the people that are joining us early. Here we've got Shahid, we've got Ed as well, Oren, Paul, Miles, Marco, Deb, Joe, Chromium. Welcome. Seems like you're new to the community. Thank you so much for joining us. Dave, Adrian, a lot of new members, a lot of people really giving us some heavy support on that video for the weekend. So thank you. Give it a thumbs up if you enjoy these streams, but let's get into it. So we know, guys, that we have massive week because it's not only earnings, but of course, volatility into earnings, with Tuesday really kicking off a lot. Of course, we find ourselves on Monday right now, but Tuesday kicks off with Tesla. Just be warned, everyone, the options market is predicting a plus minus 10% move. Of course, Tesla coming in with a lot of negative sentiment, which does sometimes drive actually bottomings of markets. We end up getting possibly a positive sentiment from the earnings report. That will be an important tell for a lot of us to maybe solidify a low. So that's something I am open to. You've got to be open both ways. Remember, the current concept is super negative on Tesla. I posted about this on X. Did you know that Tesla is now down 40% this year alone? Year to date, it is down 40%. I think Apple is somewhere in the vicinity of 16, if I remember rightly, 14 to 16. Obviously, Meta are up big time, so that's going to be a very volatile stock as well, trillions of dollars. And I think last week we wiped off 1.7 trillion in market cap between the big Mag 7. So that's a huge move. One of my favorites at the moment, Google, possibly even overtaking Microsoft as my new favorite moving forward. We'll talk about that. And both of these are expected to be pretty big in terms of moves. Look at Caterpillar as well this week. Anyway, let's get off that chart and go into some more. I want to talk bullish percent index. It's been a while since we've discussed this one. We used it incredibly well last year to kind of solidify market bottoms and to find that kind of bullish move. And in general, you know, with the bullish percent index, it either kind of stops somewhere around this 40 zone or it just keeps dropping off. And that usually gives you that deeper pullback. I think if we keep dropping off bullish percent index, then there's a real chance that the 50-week moving average could be hit. Now, this is in many ways my kind of bad case scenario here in terms of what I think could happen during this path. And we'll talk about that. But yeah, bullish percent index is still dropping. That shows an acceleration. And at the moment, when we see these types of switches coming off these highs, they have predominantly given us the deeper pullback correction, the kind of between 9 to 10%. So we'll see whether that's possible. Let's have a look whether it is. What do we expect moving forward? First up, CTAs. Both CTAs here. Commodity Trade Advisors, if anyone doesn't know about them. Systematic funds. Obviously very important. By the way, we will be going through Bitcoin later on because, of course, Bitcoin's starting to show some recovery here. These guys are pulling it back to neutrality. So they've been super bullish. Now they're turning a little bit bearish. And this is getting it back to neutrality, which is good because that's where we need to be for them to resume into bullishness again. So CTAs kind of ticked us off a little bit in terms of us slowing in this melt up. Then they broke down, giving us a pretty good trigger that was probably going to get to the weekly 20. Now we find ourselves at the most important market. And we're watching CTAs as well to see whether we've got a buy the dip or basically sell the rip style scenario. If these keep dropping off, like this one here for the SPX, which has some room to drop in terms of getting back down to these more neutralized positions, that would also tell us that it's probably a dead cat bounce. So a false rally was coming through because this is a rally point. You know, the weekly 20 moving average is where you will generally see a buyer. And we'll go through that soon. So here's where we are, in my opinion. I think that whenever you do any comparisons, you always want to be comparing as much as you can to similar growth periods, similar circumstances. This is a great one here from Podcast, and you'll notice that the 0.93 correlation is quite strong. So it's really pointing to most of these squiggly lines in terms of combinations showing signs of pullbacks in time that end up in bullish situations. And I think this is important. This year is an election year. Now, I'm not here to go into politics. We're not talking about that. Yeah, you will be banned if you talk about that because we don't care about that. What we are interested in, though, is how does the market react to it? So, of course, the way that we look here is we basically look at a market that is generally speaking going kind of like sideways to down for a period, but ends fairly strong, and that it's going to be volatile because we will have a volatile, I believe, election year because of the nature of what's going on. Also, after what happens, the calm after the storm. So, the chances of a 2025 being a pretty good year, I think we're going to talk a bit about that on the market as well. Because I know, of course, we're being thrown all this stuff from the news. And I often say to people that have done our mentoring, to people that I've done even training with in the past, and to myself, you must ignore, and you'll notice we often do ignore, talking too much about the news stories out there. We hear about geopolitical tensions. I've said it on this show and I'll say it again. It's not going to get better, guys. Unfortunately, it is going to get worse, and there are going to be more geopolitical tensions over the next coming years. It's the nature of where we're at in terms of societies, unfortunately. And I look, you might disagree with me. Maybe you agree with me. Chat, do you guys think that's real? Do you think it's not real? I believe it's going to get a little bit worse. I also think that one of the concepts of that, or one of the strengths of that, is going to be things like we've been discussing, the idea of copper, the idea of some raw earths and minerals and metals and those types of things becoming more sought after. Remember, copper has gone through a very huge loss for a long time. Basically, a loss on commodities. We then saw them spike up during that reinflation story. So this is going to be, a big, along with some other ones that because of the nature of the currency cycle we're in. So anyway, because we're in a point in time where we've got geopolitical tensions, on top of that, we've got data becoming the most important asset of the next decade as we enter into AI. I liken it that every decade has a game-changing technology. And I just want to tell you guys this. I've said it to my macro community. If you ever want to join our private community, free 7-day trial, highly recommended at the moment, putting out some banger content, I think, myself. That's behind a little bit of the closed curtain, but it's some banger content. Anyone that's a member, you guys would know. One of the things that we've been discussing is the idea that AI is this decade's technology. Now, you might say, well, yeah, no duh, Tom, but it's very important that you keep that in mind, because where are we in the AI cycle? Are we at the beginning of the AI cycle, guys? Are we at the middle, or are we at kind of the end of this euphoric period and AI is integrated? So I'm going to ask everyone in the chat, because I want to know what you think. I mean, what do I think? I'll tell you in a moment, but what do you think is more important to me? So let's quickly load this up. Let's get a early, middle, or late in terms of AI. Now, if you've been trading the markets for a while, you would know that this is not the first time that AI has come up as a very important aspect of the markets. Of course, there was the boom and bubble of the previous years, which we saw back in 2017-18. It was pretty wild back then. Don't get me wrong. It was pretty good in terms of the overall moves, but there was a massive crash. So let's get this poll up. I'll quickly get that going on. Here we go. Get in here. Thank you also to the over 100 people that have already liked the video. If you could, that would be awesome if you want to do that. Okay, let's get this done right now. So we've got AI current cycle. Okay, here we go. Early, middle, and I'm going to give it the other one. I mean, it could be late. All right, let's go. Go, guys. Vote. Give it a thumbs up while you're voting. Let's see what you guys vote in, and we'll keep going through this discussion of 2024. So again, did we expect that something like this could occur? Well, when you look at this type of election year, not the normal election year, of course, normal election year usually pulls back a bit around March and April. That didn't happen. So when we get this type of election year, held by this green line here. I mean, I've looked at quite a lot of different 4 years as well, which are 2024, 2014, all these 4 years. What you'll find is a lot of them do have this characteristic. which is a drop after doing well in the start of the year, and then a return to form for the rest of the year. So this could be a little bit more volatile moving forward. It is possible, and we'll go through the charts. So this is another one just showing, again, similar situation. And of course, the most correlated election years that we've been talking about have been 2012, not new to anyone that's been watching, and 1976. So these two big ones here are what we're kind of looking at in terms of the track at this point. Now, in both of those situations, if we updated it, we find ourselves kind of here. We're in the middle of April. We find ourselves at around this point. And of course, what did happen after both of those was actually a pickup that then was led by a little bit more of a drop. So I think it's very important that we all take a step back and you decide, what are you? Are you an investor? Are you a trader? Are you a day trader? Are you a scalper? Are you a swing trader? Or are you a position trader? All these things are different scenarios. So as an investor, is now a good time. So let's go onto the charts here while we get some more questions and answers set up. And we'll start with the US 500. Where do we find ourselves? At the level that markets tend to pull back to if they're in aggressive bull runs. The 20 moving average, okay? The 20 moving average, the 20 moving average. One bounce off the 20, went through, hit into the 50, yeah? Bounced up. Over here, we get another bounce into the 20. Now, because we already started this trend over here, you could argue that there is a potential for the 50, which is leaning into 4,700, our third bull zone, or our main bull zone really here, other than where we are right now. This could be actually, an exceptional zone as well. It is also the most traded zone throughout this entire structure. So if you think about it, where were most of the orders placed throughout this bull run? Here. Lots of money went in here. Lots of money. So lots of money went in here. It led into a second big bull run. Then we've kind of come down here. No doubt a great area. It's a good area, no doubt. And then, is this all we get? A 5 to 6% correction? Kind of in statistical averages. Or do we get something that we don't usually see for another kind of 100, 150 days, which is the rarer in terms of bull runs, 10% correction, okay? Which takes us to this point here. Now, a lot of you are going to say you're going to get 10%. We'll go through it soon. We'll see whether that is possible. All right, let's get this poll underway. So it seems like you guys are voting pretty heavily towards the early side. We'll close it up. Let's see what you guys voted. Michael says here, US trying military to using military to maintain empire. Yep. So you definitely will have growth due to that kind of thing. It's pretty standard. You're correct. People are starting to get into this idea of, how does the system work? How does some of these things end up playing through? And I do think that you've got to remember, okay, you guys voted early 55% for the AI cycle, mid 33%, and late 10. Now, of course, a lot of people here are probably thinking these AI stocks are overpriced. Well, they've been discounted a little bit. Obviously, nowhere near as discount. They're still up a lot for the year. But if you think they're in early, then what's going to happen? Well, there's probably going to be a couple of hiccups along some of the earnings tracks. So maybe they don't make money as quickly. Maybe there's some issue there. Some point in earnings, there'll be definitely an issue that'll give people opportunities. The other thing is that if we're early, we're still implementing the technology. Now, whenever you implement technology, if you go back to things like the dot-com boom, you obviously saw, and I think this is important to state, a lot of IPOs coming out that were useless businesses that had no use. I believe that will happen again over the next couple of years. Remember, we have a pretty dead IPO market. This IPO market is probably going to uptick. On top of this, we also most likely have in the AI space a lot of kind of early adoption that needs at the moment employment. Okay. So it needs employment. Now, ultimately, see ya. We're going to get rid of you. Thank you very much for installing what we needed in the infrastructure. But at the moment, there's employment. So I do think that this is the biggest area of growth story. And this is really everything along with the fact that we just even saw another, I think, what was it, $94 billion or something like that put in by the US in terms of looking at the Ukraine situation, everything like that. So this is, again, it's more money that's going into the systems. Now, when you pledge that amount of money or that amount of money comes through, it technically does instantly hit the system. So it is somewhere in the system creating jobs and doing this and doing that. So there is a massive infrastructure build underway. So often mention home builders, and I'm just going to kind of bring it up here before we keep going through the S&P because I think it's very important. This chart is quite key because we're in a construction boom. You might disagree, but anyone here work in construction? Anyone here work in construction in the US? I'm sure there's someone there. Are we in a construction boom, whoever that is? Check it out. Is it a death spiral? Probably. It could be, certainly be. Thank you very much, Stacey F. Appreciate it here. XX says SPCE doesn't have a bottom. Yeah, well, we've talked a lot about SPCE in the past. So Scott says no. D-Striped says yes, we are. Okay, we need people in the industry. You guys tell us. You're on the ground. You're working hard. Scott says it has slowed. Yeah, okay. So it might have slowed. I don't know. It depends on state to state, I'm sure. It's probably a overall concept here in terms of where we're going, but it did definitely boom, yeah? So what you're looking for a lot is whether this slowdown that you're claiming that's happening right now is continuing to dribble slower or whether it gets reinvigorated again. Because it is very important that this chart remains ultimately bullish, all right? It does need to remain ultimately bullish. Now, it just returned back to the weekly 20 moving average. Again, this one here ended up at the 50 last time, which pulls us down to this price. So I think in here is very interesting structure for home builders. So I would suggest this is a chart that you should be looking at over the next coming weeks, because what we did was we ended up following this path and then we ended up kind of going a little bit further than you would expect. So we actually pushed higher than the previous move from the low. Now, I'm sure if I went and got this one here and pulled that up and then said, okay, that move there should be about equal to this move. Yeah, it's getting a little bit closer. But if we did take this distance, then we've still got a little bit more room to go into this range. So again, home builders, one to watch. If this starts getting sick and it takes out this low and it doesn't rebound off this level, which the 50 would be sitting at the same time, yeah, you can start to question a few things, okay? So do not discount this chart. You might think, well, I don't care because I trade AI. I think this is a huge amount of what's underpinning this current market. So it's very, very important here. So yeah, we need to be looking at home bunkers building is the new trend. Are we going to come back with those? What's that? I can't remember TV show and went downstairs and there was little like in their basements with babies. Yeah. So anyway, home builders definitely one to watch. All right, let's go back to the US 500. So we've kind of ascertained that there's a couple of things that we want to be looking at. We've ascertained that, yeah, it's going to be a bit of a bumpy ride here. At least in general, the bumpiness kind of tends to go through the next kind of 2 to 3 months, and then it becomes more stabilized. I think we could even have a secondary dip later on the year leading into the election. So, yeah, there's a lot of vol here. Now, speaking of volatility, VIX, you're going to want to look at the VIX. It's staying at 18 right now. Now, if it drops below 16, I think that's an important factor for how this ends up playing, whether it plays as a dead cat bounce and comes up and then goes back down to the 50, or whether it just kind of keeps rallying up. Obviously, if the VIX drops considerably, that will be key. So let's just quickly load the VIX side by side here. We're going to load the VIX up and we're going to have a look at where it is. So this is what happened back in August. We got that kind of calming here, and then we blew the VIX back up and we stayed relatively high. Notice we stayed above 16 in most of these closures, and that was kind of where the S&P had its biggest problem. So if we have a look here, you'll notice we kind of had that initial drop, which brings the VIX up. The VIX didn't get as high as it is right now. So obviously it's a bit more freak out right now in terms of movement. And then we had that secondary drop. And usually with a drop, you're looking for those rallies. See these rallies here? You're looking for those rallies in general to kind of hold above an amount. Now I'm estimating based on options that it's around the 16, somewhere between the 15 and the 16. So I think it's going to be very important for everyone to be looking at the VIX, even though you might say, oh, dead VIX, who cares, man? I think the VIX with options, with CTAs, with the data that we talk about all the time could give us some inklings on whether we're getting a recovery or not, okay? And it's only a recovery off a 5% drop, so it's not really that pronounced. So what is really the market doing? Well, my opinion is that it is shaking out retail traders from mostly most loved stocks. Now, we talked about how Nvidia, how semiconductors, they went too quickly. And you might say, well, this is the first time that's ever happened. It really is not the first time it's ever happened. If you've been watching those stocks for a while, they often do this. So let's just quickly go S&P 500 key levels to watch this week. Overall here is certainly a bit of a, I can see a bounce zone. And really the bounce could even go up to around the 50-50. Now we know already there is a supply zone here. One touch resistance, two touches resistance, key level at 50, 50, 50, 60. And I believe this could be a level that we want to be watching throughout this earnings season, because ultimately it's down to earnings. If these big tech stocks don't live up to expectations, I haven't got the chart here, but pretty much all of this particular earnings season relies on the Magnificent Seven. So the Mag 7 is, because the rest of the stocks aren't up enough. So the Mag 7 is a huge component of how the market is going to be, looking at it and saying, we expect maybe, do they expect results, or do they just expect, okay, we're going to get some future growth? So like something like Nvidia might do pretty well, but maybe some of the other companies haven't been able to build the growth out just yet. So again, if that happens, 50 DMA, or 50 weekly WMA, 50 weekly, I reckon will come pretty quickly. What do you guys think? 50 weekly if we don't get a decent result out of a couple of these big tech stocks? We'll go through gold in a minute. I know it's falling off. We'll also go through oil. Cannot say we didn't warn on oil. I did not like what I saw on the weekend. I did not like it. It looked like crap, and it is still crap, and it's going to go a little bit lower. And again, this is the problem that people fall into. You get this storyline, geopolitical tensions, okay? Again, not going into any of the human rights issues or anything like that. I'm just going into purely the storylines. You're fed this storyline. Oh, it's scary. It's scary. We're going to have to buy oil. You look at the chart. It's like a vertical ship to the moon. And then that comes out. You don't think they already have the tensions underneath. It's unfortunately not a new story. It is used as an excuse to dump to us, the retail traders, often. And that is a big problem. And that tends to be what, really does happen. Also, thank you, almost getting to 1,000 viewers here today. Appreciate it, guys. Give it a thumbs up if you do enjoy the content. And let us know when you if you enjoy it. That's always good. Great to see your comments as well recently. And thank you again for the weekend bid. That was pretty cool. So US 500, clearly a put derived zone. Very important it sits here. I'll just show you guys what it looks like from the put side. So here are where we are coming into this week. So you can see here the 49.75 defended put zone. So basically we are in negative gamma. And what negative gamma situation means is that if we end up losing 49.75, you'll see kind of what I believe happened on Nvidia last week, which was Nvidia was closing underneath a huge amount of puts and it needed to be hedged. And we don't know this, but it needed to be hedged. And that created kind of like a flash with not much liquidity. That then obviously SMCI dropped, but that was the same thing. You saw a lot of options sitting underneath. So options do matter in this market. Zero DTEs have changed the game in many ways. And 49.75, it is a put wall. So if you don't want to pay that out as the street, then you're going to hold above it. But if it gets taken and closed, then of course it's going to create kind of like a cascade effect. And you'll notice that cascade sits even later on this week, 23rd, Tuesday, earnings, obviously Tesla. If we take this level, you can see, I'm sure that on the 24th and the 25th, we're also looking at huge amounts of puts floating all over this zone. So if we do take this 20 weekly moving average, and we take this level, the chance of a cascade effect to the 50-week moving average is relatively high. So the 20 is very important. It closed right on it, basically smacked into it. So it's a very important level. So yeah, I think the supply sitting around the 50, 50, 50, 60. We've noticed many times now that when we've come down, we've often hit 61.8 fibs. You'll actually see that we hit a little 61.8 fib here in that little pullback before. We actually hit a 61.8 fib in here as well for that little pullback over here, which also happened to be the supply. If you managed to get that trade, it was actually pretty good. That's a pretty good trade. This one, a little bit harder, though I did mention it on Friday because I thought it was possible. And if we got a full 61.8 pullback of this kind of drop, you'll notice it's right at that turning point. So where this supply zone sits, 50, 80 highs, this is where the bears need to be fairly resilient. Because if they're not resilient around here, it's probably going to do this. I think it's a fair assumption to think that this is an incredibly key zone. What do you think in the chat? True? No? Yes? Duo Inside says, held socks last week while on vacation without internet. I could say two things. One, you lucky man, had a nice, awesome vacay. Two, lucky you didn't have internet. Because I know that you'd be clickety-clacketing. You'd be like, ooh, shit, about $100. And you'd remove it. and you could have been up thousands. So you know what? That was a great vacation. Great that you didn't have the internet. And it probably proves something, which is that sometimes you are, like all of us, our own worst enemies when it comes to trading. And I often say this, and I'll give you guys a top tip here. Whenever it comes to trading, the best thing to do every time, do your analysis in a separated program from your trading account. Okay? Has anyone implemented that tech? That we've talked about it from years. I can tell you as guys, we have the impulses. We're psychos. We all, just want to get in there. And I'll never forget. I always tell this story. I'm on the boat one time and I was going fishing and these two guys came on and I was on like a charter and I know the dudes. Anyway, I was standing there and I'm like, what the hell's wrong with you guys? And they're like, oh, Bitcoin's trading. It's crashing, man. It's crashing. They're like green. They're like, I don't want to go out in the boat. I'm like, bro, what's wrong? And they're like, oh, we're going to sell it all, man. And they're just like pressing buttons. I'm like, he goes, oh my God, I just liquidated half my life. I'm like, you are a moron. But the point is that this dude was just full, like his mind, he was going crazy. And that's not a position you want to be in. So ideally, you do your trades in a separate account to your technical analysis or your analysis in general. That will help you to remain some kind of sanity here. Some other things that I'm watching, you've noticed I got a VWAP through here as well. VWAP will hit in at the same point as the 50, so 50.26, also a level you could mark out on your chart. Anyway, I thought it was important for us to do this SPY because if the SPY does end up taking a new low and closing, I really don't see much holding this thing up. I mean, I do have my little green line here, but in general, my thought process would be in here. And that's because it makes sense to get into this zone and hit that 50 based on previous history, based on previous pullbacks. When they come back for those types of moving averages, it would make sense. So right now, the bulls must hold. Very important they hold this level. Let's look at semiconductors versus SPY coming into today's market. So here we have semis versus SPY loading up here a couple of key moving averages, just a couple of normal ones, 20, 50, 200, if anyone wants to know. And you'll notice this is where every one of the SPY has pulled up. So semiconductors versus the S&P 500, this has been so far where all of the turns have happened. There is something worrying, though, about the way this happened. What do you guys think that is? What's worrying about that particular chart more so than if it just came down here normally? Chio Inside says, you're right. Best thing to do is to sit on your hands sometimes. Agree completely. Great show. Thank you. No worries. Panic never makes dollars. Absolutely. Liam says, just liquidated half my life. Well, it's the crypto life, guys. Crypto. And I'll never forget it because I said, you're not even in Bitcoin, are you? They're like, nah, man. I said, I spieled off whatever it was, 5 crap coins at that point. And they're like, oh, how'd you know most of my portfolio, man? I said, because you are like everybody else and you're trading this trash that you don't even know. I said, what does that do? He goes, I don't know, man. I said, you don't even know what it does. And you put like half your life in it. You're a mad dog. Anyway, that's the thing. That's the crypto life sometimes. Crypto life, guys. When the altcoins go, they go. Closed on the low. Absolutely. Closed on the low. So because it closed on the low, it suggests that pullbacks may be met with sell demand. Again, nothing in TA is guaranteed. But if you notice, even over here, often when it does give that nasty close, it doesn't show where the hell is the buyer. Where is the buyer? We need to see the buyer. So in this case over here, we actually had close on the low, rally, dump, close on the low, rally, dump, close near the low for sure, but then it rallied to a new higher high here and actually began, a bit of a change in trend towards the upside. So things certainly looked a little bit better there. This one did certainly close in the low. So let's have a look at the two stocks that are in question. Nvidia coming in today, small little bounce. So you'll notice I do have it on one line, but it is really only one line that's holding. Do we have any key levels? Well, let's have a look at the structure. So I mentioned, and someone laughed at it, that this level here was possible last week because really a pullback should at least hit here or here. Now, I love the 673 zone. Ooh. Anyone else love the 673 zone? Damn, dude. Oh, that's a nice zone. I really like that zone. And the reason I like it is because it fills the gap. It hits into a level. I expect it to go a little bit lower. I'd just love to see that. That would be sweet because, I am a believer in Nvidia for now. Could it be the world's biggest company? What do you think, chat? Could it be the world's biggest company over the next couple of years, even if it doesn't deserve to be yet? Is it possible? It's possible. Really like Baidu. Yep, very good. Only half his life, his week show. That's what Hoz reckons. Andrew Cross says the. Buck says base coin has been a great play in overall dollars in the crypto. Okay, very cool. Evening, Wollongabba. Maybe the biggest for 3 more years. Yep, and Nvidia 600. 600. Why 600? We want just, I don't really care if it hits 600. But I think there are a couple of different philosophies here, and it goes back to our S&P 500. As an investor, do you want a little nibble here? What do you guys think? You want a nibble? Little nibble? Is this a nibble zone as an investor in Nvidia? It's a nibble zone. I don't know if it's an all-in zone. To me, it's probably not, but a little bit of a nibble, like a mouse. You don't want to be caught in the trap, but maybe you like a little bit of the trap. No nibble. No nibble. All right. Are you guys kidding? Hashim, what's up, man? Compute is the new currency. Compute is oil. I don't know what that is. Maybe I'm kidding if I don't know what compute is. I'll look into it. It's a shrimp on my Barbie. There we go, Froster. Thank you. Also, thank you to the 1,000+ guys out there and girls that are joining us here today. This is a big week. It's no doubt incredibly important. VIX, remember, watch between 18-20. VIX goes above 20, probably pushing a 50-week moving average. And if VIX goes back underneath 15-16, I think you could start to consider whether structure is improving towards the upside in markets. Okay, these are just my opinions. Obviously, they're not. Nothing is guaranteed. You know that, guys. But what you are looking at is evidence. So, like I said over here, the evidence was that I thought Nvidia would have a pullback in time or a pullback before. If you're new, I did say this many, many times, and many crazy people were very, very upset about it because I understand the FOMO was real, yeah. And when the FOMO dies out, you get trapped. And this, to me, smells like wiping up the retail traders. Let's have a quick look at the option strikes for this particular market. So I think I've got the option strikes somewhere in here. That's the VIX. Here it is. So here's NVIDIA. And you'll notice that we have a huge amount of puts still underneath. So we are trading at spot price around 762. Wowzers, there's a lot of puts down here. So if the market does continue to stay low this week, probably a bit of hedging by the street, negative gamma environment, kind of does open itself into the sell. So I think what's going to happen is it's all going to be about earnings season. And if earnings season starts to rip in the AI side, this could get aggressive to the upside pretty quickly. And you're only going to need about maybe, the 2 or 3 of these companies to really come out and do well. A Google, a Microsoft, a Tesla somehow turns it around for whatever reason. I don't know about that, but something else like an Amazon or something. Any of these, Meta does it. Any of these companies start giving an inkling to this market that it's all good, all green. I wouldn't be surprised at all to be above 800 pretty quickly because we do have a lot of puts here. So, we push back up. If these puts stay low and the market stays low, the chance of semis coming even further becomes way heightened. So ultimately is going to be an earnings play. I really think this week is just so important on the earnings. And unfortunately, that means there's a certain level of guesswork in the level. So do I like this level? I don't mind it. Do I prefer this level? Of course. But I think both of these levels present opportunities for the position-based investor, the person that wants to, look at the higher timeframes and go for the longer period. They're both interesting. This also just happens to be a 61.8 of the previous move as well, which is quite cool. Let's have a look at SMCI. I'm sure a lot of you are interested in this one. Anyone buying Super Micro right now? Now, this stock got flogged and it sold all the way into the close. Traditionally, both Nvidia, Semiconductors, and SMCI have closed on their lows. And that tends, along with the way it's been moving, that tends to bring further selling still. Okay, I'm just going to say that. It tends to do it. If I went through 100 samples of this and I looked at this same chart 100 times and it was not semiconductors and was something else, in general, these would point towards, still needing structure. The amateur thing that most people do when they start getting into investing, and I'm sure, like, I'll put my hand up, I did this as well, is they see this candle and they get that shit grin on their face and they say, you know who it is. Every one of you have done this. Every single one. 1,050 people here, you've all done it. And you go, yeah, I've got the bottom. And you just sit there and you're like, little Timmy, you buy the dip. You actually buy the F dip. Then it keeps dipping. And it dips a little bit more. And then you get scared. And then you leave and then dips for one more day. And you're like, yeah, that's right. I knew that it was going to keep going down. And then it does this. See ya. And that is your journey into trading. But initially, when you all started, we all know what happened. The dip happened. You bought Apple, went up. The dip happened. You bought Google, it went up. You bought the Tesla dip, it went up. And then, unfortunately, if you kept buying Tesla for the last year and a half, it kept going down and didn't go up. So what that tells you is you need to have a very decent plan about whether you're going to be able to hold through these things. Traditionally, a close on the low means that when you think about it, if a market was continuously open for another 10 hours or another 3 hours or another 2 hours, what's to say it wouldn't keep dropping off? Just because we close the market doesn't mean that, it's actually going to go to 24 by 5.5 very soon with futures, by the way. This is going to get wild. Stock market, stocks are going to be traded 24 hours a day by 5.5 for singles. Now, I'm sure that's already available in some markets, but it's going to become widespread. I couldn't think of a greater nightmare. It's like crypto. Crypto is a nightmare if you want to trade it because it goes 7 days a week. To me, that's a nightmare because you need a little bit of rest. Sometimes I love these markets, but wow, you need a rest. Anyway, close on the low. This could bring it down a little bit further. We do know that if we take the last pull, we get a 61.8 sitting around this area here. SMCI certainly rallied up a lot. If we think about where it came from only last year, it's probably due this. And that certainly doesn't fill me with confidence that it's a glorious rally off here. I'd usually want to see more. A dollar cost averaging person, they're going to say, look at this support. Yeah, baby, I like this. That's probably like a little bit under a 50% fib. I'm going to buy that thing. But as a trader, you got nothing because you're really guessing. Does anyone have edge that you think that's good? Okay, you got support. Cool. Okay, what else you got? What else do you have here? People of the chat. What else do you have here? Wollongabba brings up a great point. Alerts will set you free. Absolutely. When you set alerts for levels, you will be freed. You will be freed of the charts. I think he's referring to my Bitcoin comment. We'll go through that soon. Got a fib. I think the 50 fib, well, I don't have it here, but the 50 fib would be about there. What I got? I got volume, got big volume. Now, I actually did a great video. Well, I say it's a great video. I don't know if you guys enjoyed it, but I did a video a little while ago talking about wicks and talking about volume. And right here, we've got volume coming through, but volume dropped into the close. So it again suggests a fairly aggressive sell-off that someone was really hammering into. Now, if it had a giant wick on it, that would be different. I don't care whether the volume looks red down the bottom or it's green or whatever. I'm looking at the market structure. I don't know where the buyer is. There's no buyer. Where's the buyer? So when these types of markets rip, what retail traders often do, like us, we go, yeah, that's right. And then it goes, whoa, crap. And then wipes you out. And then it goes, haha, see ya. And that's a very common liquidity technique that is used on us when we first start. Anyway, SMCI, Nvidia, they both look a little nasty because of the close. Semiconductors versus SPY is certainly at that first level. So that's the one I'm actually using to kind of combat these two. So I think for some investors, maybe they'll like that level. Traders, it's probably a bit early. You're really just guessing there's going to be a bounce here. It's some educated guess on the semiconductors versus SPY. So I guess that's an educated guess, but it's still a guess. It's not my kind of replication style trade. It's more of a position, and that's how I see it. Anyway, I thought I'd bring that up. Let's go to US oil because it's getting crushed. And this was probably, well, it was pretty predictable that oil would not like this week. We did get this. There was actually a little trade in here that I really liked up to this point. Unfortunately, here, I started turning into a supply negative person. It busted a little higher and then came back down, but it ended up closing. Look at these 2 weeks. 1 week, 2 weeks, very bad price action here, guys. And what that's telling you is that it's that classic buy the rumor, sell the fact into retail. We've seen that a few times. Most notably over here back in September of last year. You might remember this was one where we turned very negative on oil. I'm actually not super negative on oil. I think that a level worth watching this week could be the 78.16, which is throughout this structure. So, I mean, here is certainly a little bit of buy demand. I haven't seen enough to trade that buy demand. You'll notice it's a low. This gets taken. I think rallies get pushed, and then we probably move down to 78. So energy stocks pulling back a little bit here. The correction, again, you should be having. When you look at energy stocks, they have performed amazingly. Do I think it's over? I don't. But they've done very well. Look at the percentage here. This year, 25%. Not bad for energy stocks. Not bad at all. Now, back down to a support, sure, that blind mice see, every single person sees this. I don't know what the hell that is. It's only a 23.6. I'd like to see a 38.2. The blind, everybody sees this, okay? It's certainly an area where I think some people might nibble. I don't know if it's a take the whole cheese and run, but it's certainly a nibbly zone. All right, next one, gold. People are wondering, why is it getting crushed? It's back to the important zone. I do think gold is weakening here. I've talked about it a few times. I've got a couple of metrics showing exhaustion. And again, it's the pullback that is healthier in a market. I don't really want to see gold vertical. Most of you guys want to see everything vertical. But vertical is bad. We don't want vertical. It blows up. This week might be the relief rally we've all been waiting for. You mean the relief rally? What relief? Relief for what? What do we want, Jeff? I'm interested to see your opinion on that one. We are 15 minutes away from the market open. So let's have a look here at gold. So again, gold has a couple of wicks up here. That shows me there's probably some shorter in this zone. It's certainly at its most important bull demand hold. So if we look here at the smaller time frames, such as the 2 hour, you'll notice this is the structural zone where previously gold has found buyers. Coming down pretty fast. I'd like to see it create some structure here if I was day trading it. It hasn't done that, just come down so far. So I would say patience is probably best here. Buying the dip is questionable at these points without some form of reaction. And something that I really believe changes the game. You've got to come from an abundance mindset in life. There's always another opportunity. Most people fixate on something. You might be a Tesla trader. You only look at Tesla. It's limiting. It means that you won't have the opportunities that other people do. 2 months ago, I mentioned gold quite strongly. Everyone hated it. Most people actually said, why do we care about this crap metal? Okay, that's what most people said. Now they love gold. But 2 months ago, no one liked gold. 6 months ago, no one liked Bitcoin. Now they all love Bitcoin. So people, we move through these things. It's kind of like right now, and I'll get into this, the Chinese market looks still relatively good in terms of base. And it looks like it could be actually bottoming. Takes a while to bottom a market off, but that's a very important factor. So with gold here, it must hold. If it doesn't hold this level, I've kind of talked about this before. I think we go down to somewhere around 2230, into this structure kind of area, and then we'll find out whether we can regain the strength. And I do expect to regain the strength in gold. It pushed further than I thought. So if you actually, like in this current rally, so if you draw these properly, what I thought would happen is that we would get somewhere between this length here, which actually hits into around this length here. We pushed a little higher. That's okay. We're coming back to the daily 20 here, but we didn't even hit daily 20. We just kind of bulled up. So I would say that CTAs have started to dump this position a little bit. Let me see if I can actually grab the information for you. I will get that for you now. I'll tell you anyway. I'll tell you 1 second. All right. I will tell you. Still pretty long. Still pretty long, actually extremely long. So this will be an interesting update. I'll put that on the next video. So I would assume that if we take this level, CTAs will be starting to sell off. And again, that could even push this narrative here. But I am very bullish on gold. 6, 18, 24 months. Yeah, I still think my 3K target will come in eventually here. Your views on gold miners, please. Same thing. I think gold miners are still very behind the curve. Good combo for you to have a look at is GDX versus gold. And you'll notice that in recent times, GDX has been ratioing a little bit better than gold. So that's as a ratio here, it's actually up 14%. So gold miners much cheaper than gold stock from history. I think that they will also suffer to a gold sell-off though. So notice here we hit into a big target zone. Here's a supply. That supply is over here as well. We hit into that zone. We find some pullback kind of thing, and then ideally this. And nothing much changes except for the current, couple of days or maybe weeks or so. But yeah, I think it's still quite strong. Controversial, but I see gold 5 figures by the end of the decade. 5 figures. That'd be pretty wild. Massive market cap at that point. I always say gold has to be considered like crypto in market capitalization. That's the most important thing. What is it? 12 trillion right now. So double, we get to 4K, 24 trillion. Yeah, I mean that's I'm thinking 3, 4K, maybe 5. Dollar index. Here we go. It's done better in previous decades, so we'll see whether the percentages can hold up. Here is the dollar index coming into the most important resistance zone. I do think this is a huge resistance for the dollar. I don't expect it to be able to chunk it easily unless, again, the stock market has bad AI results. So the big tech companies don't do well. Dollar's a bit hard here, I think, from a trade perspective. If you're going to be anything, you'd be bullish. But yeah, the one good sign about bulls is that it's hovering below the main resistance. Now, if it sits here in coils and then breaks out above, even though that's going into resistance, generally speaking, it will go higher. It's a good little tip when you're looking at these structures. When they stop just before the main high and they coil for a while, so if it keeps coiling for a little bit, when they do break to the upside, they tend to actually fully take that resistance out. Okay, Bitcoin. Let's do Bitcoin. We've got 10 minutes till the market opens. We've done NVIDIA. We've done, obviously, SMCI. Both looked like pretty bad into the close. Obviously, the market, no surprises to see a little bit of green here. We've got the key levels for S&P before. NASDAQ, and actually, NASDAQ's a bit hard to read in terms of, can trade it, but trade it off the S&P, in my opinion. And US 2K is going to also be worth watching in a second. So Bitcoin. Now, this market is pretty decent. I actually am surprised it managed to hold so well, but we get the wicks and we get the strong rejections from the 60,000. Now, I thought when 63 was taken that we might actually weaken off and take this level. We did not get any closure. So unfortunately, no closure means no reprice to 52,000 for a lot of people. People wanted that. I say unfortunately, if you're long bull crypto, you probably don't want to see that at all. But right now, it's actually changed trend on the smaller timeframes towards the upside. Now, it clears off this level here, this 68K. I kind of feel like Bitcoin's going to a new all-time high. This is after, of course, we've had the party of the halving event. It's holding pretty nicely. It's right in that supply though, where the bears kind of could push it down. But at this stage, what I would actually draw is something like a fib here, and I still think this is an interesting day trade. So somewhere around that 63-ish K could be a buyer in there, and I think smaller timeframes would be worth watching. When you're going to Ethereum, you'll notice here it is about the same. So you've got watch reaction here should be around here. So 3,278, we've got the resistance. We have a change of trend towards the upside on the smaller timeframes, just kind of signaling a little bit of bullishness. I wouldn't be surprised at all to see it at least tap into this zone. This is where the bear sits. Okay, the bear sits in the same area on Bitcoin. And if they go bullish, then could we be starting to see the beginning of alt season? One of the things you'll want to do is you'll want to have like some kind of BTC ETH code. Well, not BTC, ETH BTC code. So something like this. And you'll be wanting to look at the ratio because at some point the alts are going to wake up against Bitcoin. And this tends to be historically the time it happens. So post halving, it tends to happen. If we go back over to previous halving periods and we have a look, where are we? 2020. So in 2020, we started to bull, of course, from Bitcoin's perspective. Then in here, we kind of started that halving cycle, which went on for the rest of the year and became crescendoed, then crashed off, then obviously went bonkers. So ETH BTC of some kind will be worthwhile. I don't know if that's the real ratio there, but it's certainly worthwhile putting it on your charts in terms of getting that there. All right, let's get everyone's opinion on Tesla. Where's it going next? Up, down, guys. Up, down. This is the one that is down right now. It's down into earnings at 140.95. Now, does anyone know the significance of 144? I told you we would be right one day. Yeah, you've been watching the channel for a long time. I was pretty negative on Tesla here into this zone. And I remember it got so close and we had to give up on it around here and say, damn, it didn't happen. And the classic 145 gap fill, the 61.8 pullback, the area that had to fill, yeah, and it just didn't do it. So I was right. This took me 2 years or whatever, a year and a half. We got there in the end. That was one of those times where I felt pretty strongly about it getting to the point. And you got to be adaptive. I remember that was a pretty decent short, and then it ended up being only a slight profitable short, not very good in the end. Had to hold it till it came back to see the turn. But yeah, the 145, we were right in the end, guys. We got there. It is 140 at the moment. The market is obviously slaughtering it into earnings. So this is going to be, I believe, a reaction to earnings play. Now, earnings can change everything. So right now, this is getting destroyed. Now, you can see here, it got destroyed over here into earnings, and then the earnings turned, and then we ended up going to a big V and finding quite a lot of good stuff. Now, we've also sold into this earnings, then the earnings turned out to be a turning point for the markets. So it could be cataclysmic, and the markets go all the way down to 120 level, 123. You guys in the chat looks like you're talking about here. Netstar says, I remember when you said Tesla 140s. Yeah. I remember we got 150. We were talking crap about it up here. I just remember that. It was pretty funny. But we got there. So gap close, gap close, gap close. Yep, we've done it. We did it in the end. Peter knows. It was at the conference, awesome conference in Vegas last year. If we ever come into America again, you got to come. Love you guys. It was awesome. We had some amazing members of the community, including magicians. I didn't even know this, but we have magicians, legit, high quality magicians. Shout out to who you are. I'm sure you're in the chat. I hope he's doing very good. Very good. Yeah, he was pretty amazing. Tesla 130, Tesla. Yeah. So I think that the 120 is possible. Around here, anything you're looking for that V, it's in capitulation. Every day it's making a series of lower lows. It's obviously coming through with negativity. We got reds. We don't have any ability to see anything taking new higher highs. We're looking for that sign. So one of the things that we looked for last week, which was Lulu, and we saw Lulu actually coming good. And this was a stock that I had as a bullish stock. And look, Lulu, damn. You piece of rubbish stock. Good work. Thank you. 355. Yeah. Up 0.72. It's beating the market today. Anyway, this was a capitulation stock as well. So basically Tesla, in my opinion, is in, I don't know how low it goes. Okay. But what I do know is that this earnings season is going to take us either into a trajectory to the upside from a real turning point, and possibly the low put in. Or if it goes really bad, I still think it's going to get us to a turning point. I just think it's going to get us to one of these key subs. So what I'm looking for is, I don't really want to trade Tesla into the earnings. I want to react from the earnings. So we'll be doing a special on Tesla this week. Again, I'm not going to understand what the hell the report means, because I think that can cloud your own judgment on the charts. But I know that this market is freaking. Oftentimes when markets freak into an earnings, they'll turn. Meta. Remember Meta, guys? Remember Meta? Remember Netflix? Now, Netflix actually had a double dip. That kept dipping in the that dipped in and then had an even worse earnings. But Meta was one of the classics. Here's our earnings. Oh, it's horrendous. It's so bad. And it pushes you into a monster low. Whoa, yeah, baby. Let's go up. That's what it says. So it was a massive turn point for that market. Pension funds rotating equities to bonds. Yeah, okay, yep. That's one of the things here. FBTC is pretty much inverted BTC anyways. Look at SE, Tom. I'll have a look at SE. What's my opinion on Meta? Doesn't look too good on the charts. Another one, like it comes down, hits this low, finds a bear pressure up. I mean, in some ways, that looks like a Wyckoff. Again, it kind of starts to support. If you look at some of these Mag 7 stocks, they support an idea of getting gap fills, which again, if that was to occur, it's not really wiping much off. It's wiping a bit of market cap off, but it's not wiping the end of the world off. So if that was to occur, again, 50 weekly moving average or even a little bit more might occur. Google, one of my favorite stocks at the moment, holding very well. It's a very strong stock. You can tell that there's a bit of oomph behind the old Google. The data play, one of the data plays at the moment. Old Apple looks terrible. It's opened. We got the ding, ding, ding of the bell just then. So it's a good point for us to come to Apple. So Apple did go below the low. Now, because this did go below the low, there's going to be a lot of people that lost their position and got hunted throughout the Friday session. So if Apple's going, let's say in the future, Apple did this, do not discount Apple to make a new all-time high, regardless of what you think fundamentally about it. If that was the way it played, okay, very interesting. Because this most traded Acume zone is a huge breakout for it. And this would have the hallmarks of a big street kind of play. So at the moment, though, of course, you've got to take it on face value. Unless it gets back above this kind of high, I don't think I'd be day trading it towards the long side. My opinion, maybe you're a buy the dipper. If you are, maybe Apple is your favorite. So we're off in the markets here. We've got 2.23% up on Nvidia. So it's finding a little bit of purchase off losing 10 last week. So that's probably about 11% to get back. So Amazon 1.55 up. Mag 7 stocks doing the best. Let's have a look at the US 2K. Certainly a much stronger market on the futures action. Here we got this nice big bounce in terms of the wick. So someone obviously had a go at it. We took out the trend line on the way down as well, although it's not a spectacular trend line. We did do that. And I think now what we're looking for it to do is to get above probably about 1984. Now, if that happens, we're starting to put base down on that already existing improvement in breadth, which basically means all of the stocks in the market, other than the mag stocks and the semiconductors, were improving actually through the Friday session. So that was a huge deal, I think. Let's have a quick look at the wheel of markets. We'll refresh this off. It's probably not updated yet, so we'll get that in a moment. But yeah, the markets are coming in, I would say, mixed. The Russell needs to break through 1985. The main kind of gains here, look at those switches that are happening here early, are in the mag stocks. And as we scroll through just even this list here, which isn't the whole market, but it's definitely quite a few stocks, you'll notice there's some up, some down. This is notable, 700, which is my 10-cent love at the moment. And why I say it's love is just because I think this stock looks pretty damn good on the charts. You can see here the power of one of the best stocks in that market. This is a Chinese market and does certainly look like it just broke high. Let's go on to HSI for a second. Just interested. Okay, so it's finding a little bit of bounce. And then the other one from before, which was Baidu. Again, these are data plays in some ways. This one here, big drop off. I would mark out, I'm going to mark out that 111 trend line in the future just in case that does break, because this stock could be interesting as well. So Tencent, whatever we call it, certainly doing a bit better. Let's have a look at SE. We'll look at natural gas because a few of you requested that. So SE up 8.6%, big bounce. No earnings at the moment, but pretty strong, I guess. I don't know. The trend is up. This is obviously the supply, hit the supply, sold off. This is a good recovery. I would think it pulls back to something like a 55 and then maybe finds a buyer. Thoughts on treasuries? I do think treasuries are at a pretty good rate here. I do not trade treasuries. I think a bond is, treasuries are not, well, when I say I don't trade them, I position in them, but I don't day trade them or anything. I've mentioned this for ages that this was a zone of interest between here and 85 or 86. I think is a very interesting area to see markets find buyers. The structure's not there yet. I do think we're in a higher for longer for the moment because of the nature of the strength of this market in terms of the growth and expansion of AI. So yeah, I don't know if Treasury is going to give you stellar returns here, but this is a pretty good area. Pretty good area. SE is the hot ticket. Yep. Ditya says, Tom, please adopt me. I'll be a good son. It's a good picture I got there. Is that the art that you draw me? I like that art. UNG, please. All right, let's have a look at it. We'll go natural gas futures, I guess. Why does everyone love this so much? Natural gas, the widowmaker. Maybe it's like outspoken people in the community. Does anyone actually like natural gas? I've often talked about it being a pretty difficult trade. All right, so I think it's just because you look at this chart. You always should look at the stocks for natural gas. Look, I've always said it. This is my lowish point for natural gas. I think that it's got good turn properties here. I would like that to get taken. So I'd like this kind of thing to happen. That would be my preference for natural gas. But anywhere in here, if you're able to hold it, and it is the widowmaker, so it actually does revert backwards a bit. This would be, a very interesting zone. People want the bargain? Yeah. Your views on path on the context of AI. Well, I'm not qualified to tell you whether it is an AI stock that is very good. I am decent at TAs. So if I was looking at this chart, I would say that look, this looks white coffee. That's a base. That doesn't mean you have to be scared, but it does look white coffee. So it's dropping based on that. You've got a gap fill in here. You've got a gap fill in here. You've obviously got a ton of trade through this range. So you could probably do a couple of fib pulls and find that there'll be structure in here. Now, do I like it right where it is? I'm assuming that's past 61.8 pullback of this run. It's probably about 75. Because it's low, I wouldn't buy unless I had a position reason. It has no telltale signs of a turn yet. It has telltale signs of selling and maybe even ripping further to the downside, but no telltale signs of a buyer yet. So have a look at Tesla again. So Tesla fell a little bit lower, 139.15. Looks like it's trying to put in a little bit of relief. Let's have a look at the 5-minute chart. We don't often go so low, but it is the open. So this is it's one of those classic ones. It's such a hard pick. I don't think we've got evidence towards wanting to buy it yet or anything like that. But I just know there's so many people out there that just buy on these market drops and they're like, yeah, it goes up. They're like, yeah, it's there, dudes. It's there. But yeah, it's not on the point. GDX selling off to be expected. Gold is down pretty hard on the spot. Again, don't think it is a concern. It might even drop more. US oil also dropping more. So it's taken out a new low. Again, I think that's to be expected. Tesla down 4.8%. Got to get on the 1 minute, Tom. That's how you do it. Yeah, but I like structure, and there ain't no structure there. Not yet. Dollar index not really slowing down yet. No, DXY is just sitting around in that good structural zone. Will you pull up N phase, please? Yeah, we'll do a solar stock, and is being one of the better of the solar stocks. So here's N phase falling a bit, coming back down into these lows. Nothing great structurally here about it yet. Probably need it to break above here. Gap fill sits at 100. I would not see a reason why that should turn up yet. Unfortunately, I do think if you're in the long, it's probably going down here. Get the gap fill, maybe then it finds buyers. So markets coming out a little bit mixed. Russell actually just dropped its gains from the morning, so sellers at that level. US 500 hasn't done too much. It's pretty much where we were. So it's still continuing to make a series of lower highs. For some people that like 20 moving average on the 2 hour, there is a kind of like a continuous pattern here, a 1, a 2, a 3, a 4, and we're at the 5th right now. So if you believe in the idea of continuing a moving average pattern, technically you would kind of like this from the negative side. James Robertson says, great stuff. Tim, keep it coming. Thanks, James. Name's not Tim, but thank you very much. Appreciate it. Microsoft, it's Tom, man, just so you know. Mike says Microsoft red to green this AM. Red to green for what was my favorite stock in the market. Look, I still love Microsoft. It's got a big moat, but I just find it cumbersome at these prices. 0.73 up. Again, Mag 7 stocks, in particular semiconductors, picking up a bit of their dip. They did close in the lows, though, so we have to be very careful about the way that it turns. Don't lie to us, Tim. I was called Joel the other day, so it's okay. Tim's got the best daily updates, that sneaky person. Can we have a look at Snow? We sure can. Let's take a look at Snow. So Snow is a company that had pretty bad earnings last time around. It's dropped underneath my main level, which is 150. So it's dropped pretty far. We took a fib from the bottom all the way to the top. You'll notice it's in kind of that really deep zone that it has a lot of previous demand. It kind of needs to hold. I still like it above 168 to get the bull momentum back in. There are many other stocks though that look better at these zones. Many other stocks, but Snow right where it needs to find buyers. All right, let's have a look at what's actually moving in terms of the bottom end structure. I always like to see in markets when they first open what is actually running it. So do we have defensives going out hot in the morning? Do we have something else? I'll bring this on the chart. So it's semiconductors up the most, technology, the ones that were beaten down the most last week. Metals down pretty hard, XME getting hit, gold getting hit. Again, to be expected, energy being hit. The charts show they need pullbacks. Now, you've got to put in the perspective in the context of everything else. If we go year to date and we have a look at how these markets have performed, I think you can clearly see something. Semis outperformed, they pull back. That's normal. Okay. XLE has performed very well. It's doing a bit of a pullback. That's again normal. And then we've got things like XME may only look like it's up 0.12, but you've got to remember XME did most of its gains just recently. So almost all of its gains come from the last kind of 1 month of move. So yeah, in particular, that's there. And then of course, GDX doing 5.53. I don't think that tells the full story. You know, it had a pretty bad start, ended up coming through really good. So putting in context of how we are sitting is very important. PBW though and TAN, at some point they will become bonkers trades. They are down so hard Have a look at the 3-year on these. Woo, it's terrible, guys. Clean energy is down negative 76%. Meanwhile, energy, you wouldn't, I should have tested you. You would not have thought this, but energy is actually better than semiconductors over 3 years. Did anyone know that? Other than Wollongabba? Because I know Wollongabba is going to tell me he did. Thanks for the thumbs up as well. Appreciate it, guys. Trump fan club says, I'm a bear and shorting till 26th of April as big results coming. Meta, Tesla, GM, Chevron, Ford, UPS, etc., etc., etc. The bears are back, baby. There we are. I don't blame you for, having confidence in your short. It would be great to see a 50-week moving average. I think that would be pretty sweet for a healthy bull market as well. I would be, looking at the 50-week moving average in particular. But yeah, I could see that. So there you go. Energy is the best performing over a 3-year run. Now, if you go 5 years, what do you think the best performing over 5 years is? No cheating. Someone pick. So 3 years energy. All right, here we go. 5-year. Oh, yeah, it's semiconductors. But look at clean energy and Dan. Late cycle hyper bubbles. I'm telling you, late cycle hyper bubbles always bring these ones with it. So again, it's pretty good. That actually tells me good things about the market when you see that this is what is underneath. That is not there anymore. This is horrific. These companies didn't even make money. And you might think, well, energy's done pretty well. It has done pretty well, but yeah, it just depends on the time you've taken it. So home builders is the biggest. That's the one we had before, ITB. So home construction builders, 176. No one would think that was the second, or not many of you. So Bitcoin, Ethereum coming into their kind of most important zones, US 500 in the middle of nowhere land, only the 2-hour 20 I can see at this point. We also have a anchored or VWAP sitting behind. We have 50.26 and 50.50 from the side of the options today. 49.75 holds most of the puts. So if they want to keep it above that, that's going to be important. By the end, if we're going through the middle of the session, that is coming into lunch and we're underneath this zone, I think there will be some hedging that's needed, which can create cascade and selling effects. If we do manage to get underneath the weekly 20 moving average, I believe the next possibility is weekly 50 moving average. That all kind of happens at around 49.60. So keep an eye out, guys. Keep your mind to both opportunities. I do think that investors and positionals will be a little bit excited about this. I do think that the earnings will ultimately be the decider, and never lose sight of the fact that we have some massive movements. So we've got things like Tesla, which is plus minus 11, Meta, which is plus minus 9. And it's normal to feel terrified into these when you're seeing what's going on. I don't know. I'm even thinking this Tesla will be a big teller, but really it's going to be Wednesday. I think Meta is the most important because it comes before these two, and it's probably going to tell us a lot about the trend. So Tesla will be one thing, but Meta will be the main one. Good luck. It's going to be very, very important to check those out. And World Citizen says, sell low, buy high, play them the elite grab. Yeah. Truly says here, seasonally, the market is behaving appropriately. That is correct to the type of market that we're in. So if we have a look again at that, just a reminder for everybody, in generalized periods where we have such strength coming into the start of the year, it is normal to experience turbulence here. It is normal to get pullbacks. This is the standard election year when we've had such good times, which actually has a decline that continues. Now, of course, don't so much think about, oh, well, this decline is more than the average. That doesn't really matter. What does matter is that there is a trend that tends to happen around this period. Then there is also a fairly decent strength into the rest of the year. So I think that's important. If we have a look at election years and we think about 12 and 1976, just again, these two periods again had turns at this point. They had small rallies. They still dropped off. And then everything came good in June. So if you're sitting there in June and the market's lower and you're thinking, oh man, what's going on? If that was the scenario, well, I think we have some answers to that. Wollongova says short Dell pops all of 24. Wasn't Dell like the hotness the other day? I'll have a look. Let's take a look at Dell. Wollongova's sure of himself here. He doesn't like it. So Dell is 117. I remember when this company had to go off the market, then come back and be IPO'd again. So big movement over here. I assume this is some kind of hardware sales thing. I don't really know. Price action wise, it's still theoretically in daily uptrend. There's some big wild movements here. I'm just going to measure off this percentage just to see. Oh, yeah, I see what you're saying. Yeah, it's a big sell. Yeah, I mean, I wouldn't think there's extreme gains here. My general thought process would be probably, yeah, like that kind of thing. Or maybe like that. Yeah. Yep, it doesn't look too good. I wouldn't be really a buyer of that market. Thank you very much. Appreciate it. Coin is up 6.6%. I'll load off with this one. Appreciate it, guys. Thank you very much for coming out. I hope you had a good weekend. You're having a good start to the session. Keep watching the VIX. It's opening up here at 18, so we're still in a volatile time. The market's, again, turbulent. We're picking up where we lost trillions of dollars last week. But ultimately, earnings. This will be a catalyst. I don't care about anything else. The market doesn't care about the yields because really that just means the economy is currently quite strong. So what we care about at the moment is going to be earnings. And just remember as well, a lot of people are going to go on about the yield curve. It's when the yield curve uninverts that you need to start being worried. But just even on that one, it doesn't crash after the yield curve uninverts. It generally takes longer. And I think that's very important to keep in fact. Maybe you want to go do some study on that. Check it out on the charts. We'll eventually do a video on it. Subscribe for that type of content. Coin here, a little bit of a bounce thanks to Bitcoin recovering. And this is a little gap fill. It's got a couple of wicks there. It looks kind of like Bitcoin. And yeah, coin is whatever. It is what it is. Thank you. Have a good week. And bye for now. I might have to look at that, Shahid. I'm not sure why that would be broken. So I'll check that one out later. Should be fine, man. I'll check it out though. Okay. I'll fix it in the morning if it's broken. Thank you very much and catch you for now. Bye-bye.